Hey there, I just want to make sure that's recording. Alright, I want to share this with y'all. As y'all know, me and Warren put together a little trading account, and we are definitely down. But what's come out of that is a lot of study. Um, and I built this algorithm, essentially. Right now it's a study, and I'm working on putting it into actual automation as time goes. But it's not fully done for that yet. But it's very helpful. And so let me just give you the base of the study. Is My trading philosophy has become what's in motion stays in motion. The old rule. I know that sounds really simple, but at what point do you make the decision of what's in motion stays in motion? And that's essentially what what I've worked on, is so what we're trying to do is follow large trends and ride those trends. We're not trying to day trade, well, at least, what I'm showing you, we're not trying to. You can use this for day trading, and I have been. Um, so let me just show you here. I'm gonna do this real quick. Fix this where this is backstart here. Okay. So the essential part, let me explain this. The blue line, the thick blue line, is the 200 line. Let's go full screen. 200 line. So this is the daily below. This is the weekly above. And the 200 line is where essentially your funds and your money managers and hedge funds and people decide the risk is that it will most likely continue downward below that line. And it's been like this. This theory of thought has been around for over 100 years. Um, is you read Reminiscence of a Stock Operator, you'll find that. But so I took that thought and developed on it, and what I found is it's very effective because this is where people start getting real scared. Essentially, is what's going on. So this is the daily. So that's the big blue line. This is the weekly big blue line. And so, um, so it's the daily that most people use. I'm using the weekly for longer term investors and to kind of show you because it's good to use two different time frames. And these are so long time frames that it's, you know, people could just use the weekly and be just fine. So I just want to show you how this performed in 2000. Big market crash. Obviously, it would have rode it all the way up here. It would have got out here. We're not trying to call tops, but sometimes it does call the top. It would have been short here, got out, been neutral here, got back in, trends up, trends down. So let me just, I know I'm going a little fast because I don't want this to carry on for 20, 30 minutes and get too involved here of stuff you may not really care about or want to know, but trying to give you the basics. So obviously it says short, and that would be a downtrend, and you close out on the purple. Long, the blue, you buy, and then you close out on the purple. You can see the red here. Close out on the purple, short, long. Um, so anyhow, that's essentially what we're looking at there. We're riding big trends. So anyhow, sorry, 2008 got you out. It actually rode down short, which I do in the options market, and I just want to show you here. The daily. You can see there's a lot more movement here. Whereas 401k account is just going to take the ride on the weekly would be the idea. Um, but this will give you an idea. Basically you could use the daily even in a 401k account. And I'm just going to go back here real quick so it tracks back. Okay, That's not going short. Let's make it go short. Okay. And you can see that, you could have just used the daily as a warning sign or whatever. But these are kind of, the weekly is what I'm kind of focusing on with you guys, that kind of, because it's a little bit more longer term. You don't want to have to be using that daily if you don't want to. But it does give you a good signal. And so to give you an idea here, this recent drop, I didn't get me more in on this because this is the first trade and I was trying to be a little safe, unfortunately. I did write it personally in my personal account, uh, but we'll get in on it. It's not over, and even if it is, we'll get in on the next one. But you can see here, long rode that up. Most people miss that. I missed that. The system caught it, but I missed it on the fact of using other stuff. The reason why this is developed is over a string of losses, essentially. Believe it or not, there's you know, I'm up more than I'm down, but there's, over the years, and especially the last 2 years that I've been studying technical trading, um, you kind of learn from your losses. And the big loss I took was in silver years ago, as y'all are aware. And I want to show you all that chart. But before I do, I want to show you, this is the recent downturn. And so, um, it doesn't catch every top and bottom. That's not the goal. The goal is to ride these large trends. So you can see here, just let's finish with the S&P here. 2008 got you out, rode up here. We're getting close, is my point, guys. Um, so this is, I think it's about 66%, 70% accurate. And the thing is this will get you back in too. So just like here, most people didn't get back in, including myself. Like I was saying, I was not following this, and this is why was a big flaw in my theory and decision, is not getting back in or going against the trend. Or so anyhow, you can see that this is, whenever it crosses this blue line, it'll essentially be in a very large bear market. And if it recovers, you get back in. But you can see it's not even, it'd have to be above this line to actually be a bull market. It's really not even near there. It's showing weakness today too. And it might recover. Who knows? They print a lot of money, so. And that's the thing you got to realize is, all this here, this is all money printing. It's not that we're geniuses and we made America did, we did great things, but it's not, the valuations are so high. It's not standard stock. What this is manipulation. That's what it is. It's, they're printing trillions and trillions of dollars and it's going into the market. But regardless, this still follows it, and that's what I like. So, without getting too carried away, I want to show y'all. Let me just show you here, because what's cool about this is you can see the profitability. So to give you an idea, so 50% profitable trades is known to be very good. 2.0 profit factor, which means you make two times the money on your gains as you do your losses. 2.0 is considered really good. So the and anything above 2 is spectacular. But I guess the rule of thumb, and you can obviously do more, do better, and some people will manipulate these and sell them to you too. The rule is you never trust anything you didn't build. But so anyhow, just based on this, we're 66% profitable trades. That means so 66% of the time it's correct, and the times that it is correct, you make a buttload of money. is the idea. You can see obviously here, this wasn't correct. We're not trying to be correct all the time. That wasn't correct, but it got you back in and still made money. That wasn't correct. And so those are the trades going to hurt the percentage. But then you got in here and you were correct. So the idea is not to necessarily be correct all the time. And the weekly is mainly built for the S&P. I want to show you the daily. You can see the profit factor is down and 46% profitable. You're still going to make money even at one profit factor. The key is on something like that with the shorter term is to take your profits, not stay in there for forever. It's still going to be really profitable. And sometimes, this is going back. What I would say on the daily, if you follow it, it's better to go just long. You don't want to be trying to play short on that, just because the stocks generally go up. And so unless you're monitoring the market, so you can see on the longs, it's actually about 55%, 1.7. That's actually a very good system, and will beat most money managers actually. But you can see there's a lot of decision. Obviously it makes it for you, but and you still would have been out. So the decision's made for you. It's just it's not automated yet. So this would, on a daily time frame, you would want to monitor that. And you can, the way I got this built, go on the hourly. And that's a good profit factor for short term. It's a really good profit factor. And but they're saying you can't time the market. And I don't want to be a naysayer, but we just did short. This is the trades that I made: short, covered, short, covered, and we did pretty well there. I just wish I would have done it in me and Warren's account, but this is the first system, or this is the first trade on this system. I just got done with this. And like I think I said, I got several thousands dollars, not just in losses, but in development cost, and and me and Warren, we're down in the account there. We're gonna try to rebuild that using this, so hopefully it continues to work. But just trying to kind of wanted him to have this for his reference, because we can kind of look at it. Even we lose some money, I think if you got this study in the long term, at least if you have this at your disposal, it's a good study. It's really good. But anyhow, short. I did lose money here. Gave back some money there. I went short, and you can see where it was. But what I like to do is ride the shorter system down into these larger trends. Is what I'm working on now. So let me just show you. That's pretty much it. I don't want to make this too long, but I like to always look back at silver, because the reason why I started studying technical stuff is because of my loss in silver, because fundamentally silver should have went up. They're printing all this money and da 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 da, but that's not how things work. Fundamentals don't matter as much. So I just wanted to show you why this reinforces for me. You can see here. Now this is whenever I started buying silver. The theory was, well, it's cheap, but I was buying in this massive downtrend. Here we are, about $30, give or take, 28. And even here, So around the $30 level, that's where, I mean, I lost $15,000 on, I've made it back in options, but I mean, that was a huge, huge loss, and this was primarily what I did wrong. I was buying in a downtrend, and I can't hold out forever. So this is what's led me to technical studies. So you can see here, we're long here. This is obviously the daily, like I said, it's more of a. So we're long there, but we've now entered a long downtrend possibly. So it'll be interesting to see this. This is saying to not be long right now. I think that'll probably pull back up, but it's kind of interesting to see. We shall see. But right now the price momentum is down. So let's just look at gold. Gold's in an uptrend. You can see same here. Follow that. All right. So I'll show you oil. This is brutal. Oh my gosh. This is weekly. Um, Obviously it caught this short here at around that 50. It's almost better to use the daily on something like oil. I mean, oil and gold and silver are among the hardest of things for um, traders, and you need to be more attentive. It's not like just investing in a. Whereas in the S&P, it's just not as much volatility. So, but I'm going to show you on the daily here. You can see there, if you're going to trade it, you'd be short. I unfortunately did not, or be a rich man. I will, but so anyhow, we know this correction I know well and has contributed to this study is right here, 2014, short at 102. 2009, short at 100. So anyhow, these are things that I'm working on. All right. And like I said, if you have any questions, just let me know. Look at that. We got a offer job. I bet you that wasn't. I bet you they'll take that down. So anyhow, yeah. I mean, don't do anything that I'm doing. Just don't follow me. I just want to give y'all this knowledge. I would hate to see y'all stuck in a 2000 or 2009, and I think that's what's coming. Unless but they've been able to print their way out of everything, so there's a chance they may print their way out of this too. But I think it's coming. I don't see any way it can't come, but I could be very wrong. But even if I am wrong, um, following this, I'm not saying you should or shouldn't, but I believe in following this, you will. If I am wrong, and I'm talking to myself personally, then I'm comfortable with getting back in. Obviously, I monitor this, but and there's all kind of ways you could complicate this, but this is essentially how it works. This is the most reliable thing I've found. Let me show you. If you want to complicate it, this is what I call the 6-screen checkup. I review this every Monday. And these are all indicators, I'm very familiar with. And whenever I automate it, some of this will play a role. You can see this monthly called that too. But what's kind of cool is you don't have to get all complicated. There's money right here. So, all right, love y'all. Bye. And I guess don't show this to anyone. It's kind of I got a lot of time and money invested in this, and Warren kind of does too. Um, but yeah, I just ask you don't show it to your friends or coworkers, and even if you don't think you might think it's trash. I don't know, but I think it's pretty good. And I don't want this, just because I got a lot of time in it, a lot of work. I don't want to just give it away, right? It's actually my developer had to sign a lot of stuff too. So anyhow, just kind of trying to protect it because you can actually build these algorithms and sell them for pretty big bucks if they're profitable. I'm not saying I'm going to do that, but anyhow, I would like to write if I um, do it, but I definitely want Warren to have it and you guys to have it and not get stuck in this possible downtrend that may or may not be coming. But this is a way to kind of automate things and get the emotion out, and it's it's pretty reliable. And like I said, it hasn't triggered yet. I mean, this is a long-term system. It hasn't triggered yet, and but it's in my mind it's triggered because it's gonna. All it has to do is drop a couple points, and I mean, it's just this is slow to react, and this is such a quick drop, and that's why it's better to use different time frames if you're actually going to monitor your accounts. But if you just want to set it and forget it and not lose big money, this is the way to go. All right, love y'all. Bye.